Good morning. My name is Shannon, and I'll be your conference operator today. At this time, I would like to welcome everyone to the Park Aerospace Corp. First Quarter Fiscal Year 2021 Earnings Release Conference Call and Investor Presentation. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question-and-answer session. If you would like to ask a question during this time, simply press star, then the number 1 on your telephone keypad. If you would like to withdraw your question, press the pound key. Thank you. At this time, I will turn today's call over to Mr. Brian Shore, Chairman and Chief Executive Officer. Mr. Shore, you may begin your conference.
Thank you very much, operator. Welcome, everybody. This is Brian. Welcome, everybody, to our first quarter conference call. I have with me, as usual, Matt Faraba, our CFO. Just want to mention that we announced our earnings, of course, this morning. And if you don't have the presentation up in front of you, you want to go get that. There's instructions in the earnings release itself as to how to access the presentation. Also, it's on our website, I think, under shareholders and maybe presentations or something like that. I'm sure you'll find it if you look. So you want to get that because that'll make the call a lot more meaningful. Also, there is supplemental information which is attached as financial information, which is attached as Appendix 1 to the presentation itself. So, sorry. For those of you who attended or participated or listened to our fourth quarter conference call, which was on May 14, you know that we went into pretty great detail about the virus and the economic crisis and the impact on the aerospace industry and Park. And we're not going to go over all that again, and I think that would be not that productive. Unfortunately, to have the best context for this call, you probably need to have some reference to the prior call, but for us to go back over everything again, we'd have a 2-hour call, and I don't think anybody's up for that. Probably me included, not being up for that. So we're not going to rehash all of it. We'll do a little review of some of the and go over some updates, and then of course we'll answer questions. So why don't we just get right into it? And I'm going to be referring to the presentation and going through it for you and referring to slide numbers. So why don't we move over to slide 2? That's our forward-looking disclaimer information, and you're familiar with it, I would think. But if you have any questions, give us a call, and we'll go through that with you. Slide 3, our quarterly results. We're getting right into it. So we have the history of the quarters for the last 2 fiscal years, plus Q1 is in yellow at the right-hand column. So you can see our revenues, you can see our EBITDA, you see our gross profit and our gross margin a little bit up, about 30%. And let's reference a little bit down lower on the page what we said about Q1 during our fourth quarter conference call on May 14. We said our sales estimate was going to be $12 million to $12.5 million. So we're at $12,213,000. We came in kind of the middle of that range. Our EBITDA estimate was $2 million-ish. And we did that ish stuff because, as we discussed in great length during our fourth quarter call, a lot of uncertainty in our business right now and in the aerospace industry. So we put that ish on the end of the $2 million, and we came in at $2,364,000. So I guess that's kind of in the $2 million-ish range. Remember, our forecast philosophy is when we give forecasts, we don't play what we consider to be a game of giving you a low number so we can beat it and be a hero. We tell you what we think is going to happen, assuming we're going to work very hard and do everything we can to make it happen. We're not trying to make it easy for ourselves. Okay, let's keep moving here. When we go to slide 4, our top 5 customers, this is for Q1. And if you remember, these actually are the same customers that were the top 5 customers for last fiscal year. This is alphabetical order, so we're not commenting on the order, except I think you all know that MRAS is going to be the top customer for Park. AAE Aerospace, so that's for ablatives, the PAC-3 missile. You see that, nice picture of that in the top right. And that's the latest generation of what used to be called a Patriot missile, which is designed to shoot down hostile incoming missiles. Remember, during our Q4 call, I mentioned that we received 25 letters from the Department of Defense from military contractors saying we're expected to stay open. Well, this might be an example as to why we're expected to stay open. I doubt that the military wants to run out of Patriot or PAC-3 missiles anytime soon. AAR Corp, multiple programs, maybe interiors and things like that, floorboards for aircraft, Gulfstream program, is one of them. Kratos, that's an important customer as well, and we are the main supplier, maybe the sole source supplier, I'm not sure, but main supplier anyway, for all the drone programs. Those are tactical drones and the target drones, including the Valkyrie, which is depicted in the bottom right picture here. Then there's Middle River Air Structure System, MRAS, which was a subsidiary of GE Aviation, but that was sold last year to MRAS. MRAS was sold last year to ST Engineering Aerospace, which is a large Singapore-based aerospace company. And we have a picture of the Comac 919, which is one of the, on the bottom left, which is one of the MRAS programs. Nordam Group, multiple programs. Actually, one of the items is GE Aviation for their engines. Another is Weathermaster radomes, which would be for, I think, for Boeing aircraft, maybe others as well. Let's move on to slide 5, if we could, please. So, we'll do a little comparison here. Kind of interesting, I think, to look at our pie chart. Remember, last quarter we kind of took our pie chart, which had kind of more breakdowns and simplified into 3 key areas because we thought it would be meaningful in terms of understanding our business. So the top pie chart is just a pie chart you saw from our our fourth quarter presentation. This is for last fiscal year. And we put the revenues on the side just because I want you to have a little perspective here. Then we go to our Q1 pie chart. It's very interesting. Remember, in Q4, we said we're going to focus on military. That was one of our objectives. So obviously, military percentage went way up, partly because commercial and business aircraft went down, so military obviously went up. But do the math here for a second. Just look at the dollars. Forget about the percentages. So last year, 35% of the 60 million, that's about 21 million. I think that's the number. In the first quarter, 53% of the 12.2 million, that's 6.5 million. That annualized to 26 million. So in a very tough market, we actually grew the military segment dollar-wise, not just percentage-wise, quite nicely. Some of it's luck because some of it's just timing in terms of when the programs are produced, because it's lumpy. You know, there'll be a quarter when we're producing one program, this quarter maybe not. But nevertheless, a nice job by our salespeople, all 3 or 4 of them. We have a pretty small sales group. We just added to our sales group, though. If you saw the announcement, I think a couple of days ago, a new sales guy. So that's good. Let me see if there's anything else. No, let's keep moving here. Let's go slide 6. Slides 6 and 7 are really pretty much slides that were in our Q4 presentation. And you see up top it says revisited because we thought, well, let's take a look and see how we're doing. We were talking about different factors that could affect the recovery of the different industry segments, aerospace industry segments we supply into. Military, we hear there's supply chain disruptions that haven't affected us really very much. We've heard about them, for instance, with respect to the F-35, a program we're not on. Park programs seem fairly strong and steady so far, and as we already said, it's actually even better than that. We grew our military business, not just percentage-wise in terms of the pie chart, but actually dollar-wise in Q1 as compared to the quarterly rate from last year. Commercial aircraft, so this is the big kahuna for Park. Jet fuel prices, remember we spoke about that last time? Well, that's actually gotten better. I haven't checked this morning, but yesterday it was a little over $40. Not the jet fuel, the crude is $40 for a barrel, but obviously that's going to drive the jet fuel prices. Meaning the lower prices are a disincentive for airlines buying new airplanes. Reopening the economy, economic recovery. So we've come a little bit of what is it, 2 months, it's almost 2 months, maybe 7, 8 weeks since our last call. And, things have developed, so the economy is being reopened. One concern I want to highlight, though, is that these quarantines that are being put forth by these different governors of different states, I'm quite concerned about it. I'm quite concerned that it actually could effectively shut down the economy again. I mean, sure, you could open up a beauty shop, but most business relies on interstate commerce. And it's become difficult, actually, with all these orders, all these quarantines that are being ordered by different governors. So I hope that the governors do the right thing for the country and the economy, because if we destroy the economy, then we'll really know, the world will really know what darkness is. We don't want to do that. So I hope everybody will think about what's best for the country and the world, and not just be maybe myopic or small-minded about it. It is concerning, though, because the things were getting better, in the commercial aviation area, actually a little bit more quickly than people expected. People are getting on planes. Let's see, May was better than April, June was better than May, and July was expected to be better than June. But with all these quarantine orders, we're concerned about what the impact, because you can't travel from one state to another without locking yourself down in quarantine for 2 weeks. It's kind of pretty big disincentive for doing that. So we'll have to see what happens with that. But I just want to flag that's kind of a new thing, and it's concerning. So I don't know. I just want to flag that. Down to the bottom of the page, we're going to cover everything here, because, like I said, this is really a slide from last quarter. We just want to update you on it. So generally, the news is actually pretty good. The commercial aviation industry was improving a little bit more quickly, I think, than most people expected. Not to where it was, before the crisis, but people are getting back on planes. Let's see what happens with these quarantine orders. Single aisle at the bottom versus wide body. We covered this a lot, and I think it's pretty clear that single aisle is going to recover more quickly and more strongly. Let's go to slide 7. This relates to business aircraft. Again, slide from last quarter. Just update here. Jet fuel prices, probably not much of an issue. Reopen the economy, economic recovery. Yeah, it's interesting that the same kind of pattern. So in terms of business aviation usage, May was better than April, June was better than May, and we're expecting July to be even better. But now there's serious concern about these quarantine orders. So let's see what happens. I spoke to a couple of executives from two different, from business aviation field yesterday, different companies, and they both confirmed the same thing, which I was surprised about, a little interesting. They said that actually the smaller jets have been recovering in terms of sales more quickly than the larger jets. Larger jet like the Global 7500, which is an important program for Park. This is probably the largest business jet you can buy. So interesting. They said, well, you got the individual owner operators, they can write a check for a smaller airplane. These are not cheap airplanes. They're like, $5 million to maybe $12 million. But the corporations that buy the real big airplanes that could cost more than $50 million, they're kind of sitting tight. They're not ready to make a commitment yet. So we'll see what happens. And that was before we had this issue I raised regarding the quarantines. And both the guys said that, this quarantine, they're already seeing an impact on their business from the quarantines already. And it's just, this is a 2 or 3 week event. So this is a real concern. And like I said, hopefully these governors will do the right thing and think about what's best for the country and the world. But we'll see. Let's see. Okay. So, will social distancing and fear factor concerns for commercial aircraft benefit business aircraft? Of course it will. I mean, obviously, if somebody's in a position to buy and operate a business aircraft, that's going to be a preference they might have, considering the issues of flying on airlines these days. Will business aircraft recover before commercial aircraft? I do not know that. People have different opinions, but it's an interesting topic to discuss. Let's see, slide 8. When we go to slide 8, let's talk about GE Aviation. We always have to do that because it's such an important portion of our business. So why don't we go through the individual programs, because I think it would be helpful to put GE Aviation in perspective. Obviously, we'll start with the A320neo family, and you can read up top the different variants of the A320neo family. All of them use the LEAP-1A engine, and all these are Park programs. So last quarter, we mentioned that Airbus had announced they're reducing production by 1/3 Now, I think the production rate for the A320 was maybe 60 a month. I think that's right. So they're reducing it by 1/3. Then there was something confusing happening about, I think last week they said, well, maybe 40%. But I read that the difference between 1/3 and 40% relates more to how they measure the output on a weighted basis rather than any kind of new cut. So I think that got some attention. I'm not sure what it means, a little bit vague. Well, one thing I can tell you is for us, I've been in touch recently, just a couple of days ago, I think, with my counterpart at MRAS, and they received a forecast recently from Airbus and Safran, which actually moves the numbers up. I can't give you the numbers on. Wouldn't be appropriate. I'm not allowed to do that. Moves the numbers up in 2021. Actually significantly. And in 2020 as well. The caveat of 2020 is that, remember the whole inventory thing we talked about last time, the burn down? So it kind of muddies the water. It's not clear how it's going to impact us in 2020 yet. But those are facts I'm reporting to you. There's a lot of different information out there. Some of it's consistent, some is not completely consistent, but now you know pretty much most of what I know. The news on this aircraft is actually positive from what we hear. Bombardier Global 7500, we're talking about that with respect to business aircraft with the Passport 20 engines. This one is the biggest unknown for us. I'm not sure what's going to happen with this program. We know Bombardier is pushing the program hard because this is really the big new aircraft. The company has a lot invested in this aircraft. Their future is very dependent on the success of this aircraft. And also, even though it's a smaller engine, Park has a lot of content per engine, dollar content per engine on the Passport 20 engines for the Global 7500. This is a question mark for us in terms of where things are going in the short term. 747-8, no change of program rates. Not sure how long the Queen of the Skies will be produced, but they're not going to reduce the rate, in my opinion. They'll produce at the rate, which is 6 airplanes per year. We got 4 engines per airplane. That's 24 engines per year. They're going to produce that rate until such time as they cancel the program. Hopefully they never will, but there's some talk and maybe it's even trade gossip a little bit that Boeing may be pulling the plug in 2 years. But Boeing has refused, as far as I know, to confirm that. They've not confirmed that news. My feeling is 2 years is a long time, even if it is true. So hopefully somebody else will come in and order these airplanes for cargo. They're not really being sold for passenger anymore. It's really a cargo sale. So I believe UPS has a number of them on order, and hopefully somebody else will decide to order some more. To me, I'm emotionally involved with the 747. It's my favorite airplane, but also, just so you know, our first shipment in the GE Aviation programs, the first program we got qualified on was a 747-8. Our first shipment was on, February 28, 2014, 11 p.m. I'm never going to forget that day or that time. So we hope it lasts forever. It's been around for a long, long time. Wonderful airplane. Comac 919. This is one I suggest you pay a lot of attention to. This has LEAP 1C engines, similar to the A320, a different variant. Comac is pushing this program forward. Our understanding is actually pushing it pretty hard. Maybe partly because of trade wars that makes them the Chinese even more motivated. This is a real prestige thing for China. So, if you go to the next one, we'll talk about the Comac ARJ-21 in a minute. That's a regional jet, mostly sold within China. This 919, this is not for China. This is for the world. This is to compete with the 737 MAX and the A320. China wants to be a player in the global commercial aircraft market. This is their entry into the big time. And there's a lot of prestige involved for China, not just Comac, for the country of China. So they're pushing this program very hard. I'm not going to give you an estimate as to when it actually gets certified in production. Right now we're doing development work, but you can check their website and see what they say about it. One little piece of good news is parts lightning strike protection material is now used in the program. So it's good because that means for every unit we have more content. So this I think is a really important potential program for Park. The picture here is a 747-8. Sorry to digress, but you see the nacelles. I always love this picture because you see the person standing kind of under the two engines. You get a feel for how huge these engines are and how huge these nacelles are. Love that little sculpted trailing edge of nacelles. Comac ARJ-21, that's a regional jet. It has the also GE engines, CF3410A engines. This program is strong and proceeding well. Actually, we're told that the Comac is trying to move up this program. Move up, okay? Not down, up. Obviously the supply chain has to be able to support that. But Comac is different than the other aircraft manufacturers. They're not going down at all. None. They're going up. They're trying to go up. Okay? I just want you to understand that. Not like Boeing, not like Airbus. This is the next program we're told that is to qualify our lightning strike materials. I think you know this, but our lightning strike materials are used on the A320 program. We're sole source actually at this point on the A320 program, which is good. Let's see. Why don't we go over to slide 9 and slide 9, the 777X, and this is not a good story for us, maybe for anybody. Remember, last time we told you all the POs were canceled for the 777X program for the parts POs. Production schedules pushed out further. Boeing then announced a rate reduction for the program. Then Park was recently advised by GE that they do not currently have the funding to continue to support Park's qualification activities. And this is not an MRAS program. This is a GE aviation program. Now, we've become more pessimistic about this program of late, and we have not included it in our planning. So this doesn't affect any of our internal forecasting because basically we're not including anything for this program. We're not giving up yet. Hopefully GE will get back in the game and come up with the funding to complete the qualification, but we don't know. That's kind of a question mark. But it doesn't play into any of our thinking short term, let's say this year or next year. Next item, on slide 9, Park reached an arrangement with MRAS to maintain baseline production levels to preserve Park's ability to ramp up production when needed. And this is kind of important. This relates to hot melt. Almost all of our production for the GE programs are hot melt rather than as opposed to solution. We were kind of getting some vibes that, well, maybe, we were just they would shut down production, shut down production for us, for the next quarter or two because there's so much inventory in the system. So we spoke to MRAS and we said, that's not going to work. We need to have a baseline amount of production per month in order to keep our hot melt operation going. We have highly trained crews, and if we shut everything down, we'll lose that 5-year investment in these crews. And guess what? When you need to ramp up, that's not going to work. So they jumped on it immediately and talking about MRAS. They responded. They didn't push back at all. They realized it was a problem. So we reached an agreement. Let's say an understanding. It's not an agreement, a handshake. Is the minimum amount of production that we will do per month, and that's by unit. It's not by dollars. That's why we get down to our little forecast for Q2. It's kind of there's a range there because we don't know what the dollars will be. It's based on units because units are what drives the production needs of the hot melt departments. Just so you know, we retained 3 crews. Now, one of the crews is transferred to Solution, and we'll talk about that a little later on when we go to our customer flexibility program, which helps a lot. So that's what we need. That's our baseline so we can ramp up when we need to ramp up. And we'll get into that in a second because I don't think that day is too far off. Now, just for perspective, last fiscal year, our GE aviation program, $28.9 million, let's say rounds at $29 million. About 60% of the revenues were attributable to A320 family. But $29 million, let's say there's about $1 million for the 777X program. So let's take that off the list. $28 million. That's a nice number because if you divide by 4, it's $7 million. You get the concept. So last year, about $7 million of revenue per year on the GE aviation programs. I mention that so you can have some perspective on what we're saying is going on this year. Q1, that's an actual $4.1 million, obviously quite a bit down from $7 million. And then Q2, now we're estimating $2 million to $2.5 million. That's based upon that minimal that minimum rate that we said we need per month, production rate we need per month in order to sustain and keep intact all the capabilities that we built over 5 years with our people in the hot melt department. So that's a very low number, but that's what we said we need as a minimum. Now, what's the message here? That number is well below the end market requirements. Not based upon any increase, based on what we know now. What do we know now? We talked about the A320. We talked about maybe a 1/3 reduction in A320. We also talked about the forecast we just got. It goes up. The global 7500, that's a question mark. We don't know. 787, 7478, that's not going anywhere. That's flat for the next 2 years. COMAC 919, probably not a factor this year because they're still doing the development, hasn't been certified yet, but pushing forward aggressively. COMAC ARJ21, pushing it up, not down. 777X, not a factor. So, if you take into account just the end market requirements now, not talking about any recovery at all, based on those specific programs, that 2 million, 2.5 million, that isn't even close. And here's the problem we're facing. And the rest of the supply chain, I guess, as well. My guess, and I'm going to give you a guess on this, is that if you looked at just supply, keeping up with the end market demand of today, that number is 4 to 5 million, not 2 million. 4 to 5 million. So that's a guess. A lot of variables, and like I said, the Passport 20, the 7500 is one of those variables. But I want you to understand this because it's a really key point. So, what's going on? Of course, it's the inventory. It's the burn down. There's inventory everywhere. We talked last time how the whole kind of thrust of the aerospace market was push up, more. And then the rug got pulled out from under all of us. And everybody's left a lot of inventory. So, at some point, though, the inventory is going to be normalized. And then what? Then the end market is going to have to drive the production requirements. We're going to have to keep up with the end market. So my concern is this. I'll just tell you, I think the supply chain is demoralized, kind of in a survival mode, maybe feeling sorry for itself, maybe not paying attention as much as they should. My feeling, and this is just a feeling, I could be wrong, well, sometime if the market, let's say the market doesn't even improve over the next 12 months, at some point there's going to be that day of reckoning where the inventory is normalized and production has to match the end market requirement. My belief is, I could be wrong, that's later on this year. My other belief is that a lot of companies in the supply chain are going to really be caught off guard. Because they're going to be told we've got a problem. You need to double, triple your production. And I think a lot of companies are not going to be prepared to do that. We are going to be prepared to do it. That's why we went to these guys and said, we cannot allow our hot melt capability that we built over 5 years to be decimated. That's not going to work. We're also working with our suppliers to make sure they're able to support this inevitable change. Inevitable unless the market takes a big step down. The end market takes a big step down. The end requirements. Assuming the end requirements don't get better, it's just what we have now. There's going to be a day of reckoning, a crossover point, and our production is going to have to go up significantly. Remember what I said, probably 4 to 5 million. That's an estimate, and we're at 2 million in Q2. That's that baseline production level that we agreed to with MRAS. So then, Q3, Q4, that's really going to be a function of when this crossover point happens, and we don't know that. And this again is assuming there's no recovery. Nothing gets better. It also assumes nothing gets worse, but it assumes nothing gets better. So I'll just give you a wild guess. My guess is in Q3 and Q4 that it's going to look more like Q1. Not like last year's 7 million, because the end market is not that level, 7 million. But that 2 million is not sustainable unless the market takes a significant drop down the end market. I want you to understand these dynamics because they're really important for Park, I think are also important for supply chain. Like I said, my sense is that a lot of folks in supply chain are demoralized, maybe, feeling kind of bad for themselves and not really paying attention to what they need to think about for their future. Maybe they're in survival mode. Their future is, if we can, make payroll next week. I don't know. So I'm not criticizing people. Everybody has their own issues to deal with, and I'm not criticizing anybody. It's a pretty difficult time. But I want to make sure you get that. This slide is probably the most important slide for this presentation. Let's go on to slide 10. Some perspective on commercial aircraft industry. This is just a review. Single aisle versus wide body. We kind of beat this to death a little bit here. So there's already a trend in place for single aisle. I mean, it's kind of like unanimous. Everybody believes a single aisle is going to recover before wide body. Wide body is used for those long international flights. So there are no international flights at this point. Basically, all the flights are domestic, using the single aisles, not the twin aisles. There are 3 major single aisle programs: the A320, the Boeing 737 MAX, COMAC 919. 1, 2, or 3. Check 2 of those 3 boxes. Those are the boxes we think we want to check. We hear this 737 MAX, they're maybe getting certified again and get back in business. We hope that they do. We wish them the best. We're not in that program, though. So we wish Boeing only the best, and hopefully they'll get the airplane certified and flying again. We're not in that program, but we're on those other 2 programs, which we believe are the IT programs. So we believe if you're interested in commercial aviation, which we are, you got to be in single aisle. If you're interested in single aisle, these are the 2 programs you want to be on. So it says Park checks 2 of the 3 single aisle boxes, right? So we already covered that. Believe we're quite well positioned. And as I said already, watch out for the 919 because this is a juggernaut, in my opinion, coming because it has a full force of not just COMAC, the whole country of China behind it. Very big prestige aircraft for China. Slide 11. Okay, so what is our strategy and what strategy mean to us? It's just a fancy way of saying what we plan to do. Okay, so double down, triple down in commercial aerospace. We're not backing down. We're doubling down in commercial aerospace. People want to fly again, sometimes out of a crisis comes opportunity. So what do I mean by that? So some airlines are going to innovate and make it fun and interesting and for people to fly on them, make passengers feel safe, and actually look forward to getting on the planes. And some won't. Some will just be in a survival mode. So this is, I think, how capitalism is supposed to work. The ones that innovate and do a good job, they will not only survive, they will thrive. And the ones that don't innovate, they get back into defense mode and survival mode, maybe they won't make it. But it's all okay because that means that the better ones will survive. And this is good for the future of commercial aerospace, commercial aircraft, in my opinion. We believe commercial aircraft will be one of the world's great industries for many years to come. Park, just going through the presentation, sorry. Park believes single aisle aircraft is the place to be, so we covered that only 5 times already. Next item, we believe we're ideally positioned on the 2 most attractive single aisle programs. We covered that. And we believe the glory days of aviation is still to come. We want to be part of it. So the timing of the recovery in commercial aviation is uncertain. We don't know what's going to happen. I'm not sure anybody does. We watch, we pay attention, but we don't know. But to us, it's a little less important. What's important to us is we think commercial aviation is so important, so critical, such an important industry for many years to come, and we want to be part of it. So if it takes a year to recover, that's fine. 2 years to recover, that's okay for us. We just want to be there. Next item. We want to emphasize and focus on programs and opportunities in military aerospace markets, especially niche programs and opportunities. So we already talked about the fact that our sales in Q1 were relatively good in the military area. What do we mean by this? So we're interested in niche programs, maybe a little more out-of-the-way programs. Programs are a little bit hard to find and get, but they're easier to protect. We're less likely to be interested in a big program like the F-35 because it's so big, it's so over budget, it's so late that, it gets a lot of visibility. And, if there's a government change or something like that, who knows what will happen to these big high visibility programs. We don't want to be blowing around the wind. We want to be on programs that have real staying power and are not that vulnerable. So that's what we try to do. And it takes more work. It's harder, but it's worth it. Use Park's balance sheet and cash to our advantage. We covered that in some detail in our last quarter calls. Why don't we skip over that? Any questions about it, let us know. And we haven't spoken about this in a while. It's not that it, being a niche company, it's not that it's not part of us. It's just that it hasn't come up in a presentation. Ben Short told me about this culture eats strategy for lunch. Peter Drucker said that, I guess. I like that. So, in other words, you can have all kind of great strategies, but your culture, our company culture is a niche company culture. What does niche company mean to us? It's not a generic thing. Niche companies mean something specific to us. It means doing what others are unwilling or unable to do. It means saying yes when others say no. It means not accepting mediocrity, going for greatness. We believe mediocrity is a choice. We believe greatness is a choice too, although it's the more difficult choice to make. If you go for greatness, you need to be prepared to overcome any obstacles and setbacks. And the path to greatness can be a lonely path because you run across many doubters and non-believers along the way. But that's our little culture thing, being a niche company, and it's something we're very committed to. It's something that's kind of palpable in our company. Something that's spoken about a lot, and it's something we keep reminding ourselves of, that we need to drive ourselves, force ourselves to be that niche company. Slide 12, financial forecast. So we withdrew our long-term forecast during our last call, and the reason is simple, as we explained. We just don't know. So we don't want to just put something out there just to guess. I mean, that's kind of silly. That doesn't help you. It doesn't help us. It doesn't help anybody. It's just a waste of time. There's so much uncertainty in the global economy and the aerospace industry that it'd be just really kind of silly for us to update a long-term forecast. What do we think about a long-term forecast generally, though? Well, we're going to still trying to grow military. We're still going after commercial programs. The commercial recovery. The commercial aviation aerospace recovery is going to impact our long-term forecast because we have so much of our companies invested in commercial aircraft. So at some point, I made this comment last time, kind of interesting to think about. We're not posting our prior long-term forecast that was withdrawn, but we feel it's more like moving to the right. At some point, we'll resume that a long-term forecast. We just don't know when. How much of it moved to the right? Now, is it a year or 2 years? We don't know. And we're not going to speculate about that because it's not worth it. We just don't have a real good feel for that. But we feel all the principles and drivers for the long-term forecast are still in place. Just move to the right. Our thoughts about our quarters. So this is kind of interesting. Q1, those are just the facts, actual. Q2, so we're going to give you some ish numbers just to think about. For sales, we're thinking about 9 million-ish, EBITDA, 1 million-ish, but obviously lots of uncertainty. So we got to emphasize that ish part of it. We're just giving you some perspective. We have a little more than 8 million shipped and booked for Q2. But the issue, and so in normal times, that'll be good. We wouldn't have too much trouble getting to 9 million. Booking and shipping another, whatever, $8,000 or $9,000 for the quarter. But the risk is that the bookings where you have could be canceled or pushed to the right, could be pushed out. And there's been a lot of push-outs and cancellations of late. So that's why there's a risk, and that's why we go with the ish part of it. It's really driven mostly by the top line. Once you know what the top line is, we can figure out the bottom line, more or less. As far as Q3 and Q4 are concerned, big question marks and be partly dependent upon what happens with commercial aerospace industry, partly dependent on when all that inventory is burned down, when that day of reckoning takes place where the industry says, we kind of screwed up. We stretched this thing out too far, and now we've got to scramble to recover, and everybody's got to double their production, that kind of thing. But if you just want something to think about, and I got to tell you, to make sure that you understand lots and lots and lots and lots of caveats here, because we're just speculating. I want you to understand that. I want to make sure that it's clear. But, you may want to just think Q3 and Q4 may look like Q1, but that is very speculative. I'm just putting it out there just to help you think about things a little bit. Okay? So why don't we go to slide 13, updates on Park. How are we doing? Well, our New York office is open. I guess we went to phase whatever in New York, and we're able to open our New York office. Our folks in New York, the small office in New York, are doing great. Kansas continues to be fully operational, never had to shut it down. Customer flexibility program, remember I mentioned that? So you have 75% participation. This is really like a cross-training program. These are our employee. We have a number of job categories. If you get trained in another category, you have to take a test and get approved. You actually get a financial incentive. So, some of our employees have maybe 3 or 4 approvals. But this is really so important to us. Remember I said that we moved one of our hot melt crews to Solution. They already had approval to work in Solution. And when things are very unpredictable and very dynamic, it helps so much to be able to have people move from one department to another, one department to another. It makes us so much more flexible, so much more responsive, and so much more productive. And so it's helped a lot. We've had no layoffs. We don't like layoffs. It's not part of us. We have reduced our head count, our people count through attrition, and we have let go of some people that we didn't feel were right for Park, but no layoffs. It's something we just feel strongly about. We want people to believe and feel they can build a future with a company. So layoffs are something that are almost like against our religion. Now, we're not God, so we can't ever guarantee there'll never be layoffs, but it's something we're very, very reluctant to do. So far, we're not done. I mean, we have no plans of doing layoffs. And like I said, not God, so I can't guarantee that'll never happen. But we're very much opposed to the concept of layoffs. We don't like it. We want people, like I said, to believe they have the opportunity to build a future with our company. And, laying people off is not really consistent with that concept very much, is it? So, anyway, let's keep going here. Our Parks people continue to do very well under difficult circumstances. Yeah, it's pretty difficult with all the stress and anxiety in the world. I mean, my advice to those people is don't watch TV very much because it's all bad. But people need to come to work, need to focus and do their job, do the best they can, find ways to do better every day. As we say, if you come to work at the end of the day, you've made something better for the company, even small. Everybody we're talking about, that's a good day for you. If you haven't, that's not a good day. But tomorrow you come back and even more dedicated to make something better. That's what we're all about at Corp. Major expansions, just a little update. Remember, $18 million in our budget. Spent $10 million so far, $8 million to go, and expect completion early next calendar year. It's coming along nicely. We had some delays in the wintertime with weather, but it's coming along nicely. It really looks like an expansion right now. Let's go to slide 14. Potential significant opportunities for Park. So I just want to be clear, none of these things are in the bank. These are interesting and significant opportunities. So the B-52, this has been around even longer than the 747, the B-52, the re-engining, the B-52, and there are potential opportunities for Park in connection with that re-engine program. COMAC, that Chinese company, is developing a twin-aisle aircraft 929. Like I said, they want to be a player in the global aircraft business. So if you want to be a player, you need to have a single aisle, but you also want to have a twin aisle, a wide body. And then JD in Asia. We've spoken about that before. We haven't brought it up recently. We're not just going to bring it up every time, but it's still an active discussion, and maybe be something that would even happen next year. We're still working on it. These 3 things are potentially big opportunities for the company, although none of them are in the bank. So it's possible nothing will happen. I just want to put that out there. Those are the big things. Some big things, rather, not all of them. But we still love the small opportunities. There's nothing too small for us. It's funny because sometimes the small things end up being big things. Because you're arrogant, you're not important enough for us. I don't know. I'm not going to pass judgment too much on others, maybe a little bit, but all I can tell you, that ain't us. That's not how we look at things. If we're being made to feel like you do not matter, you're not essential, let us know. Maybe we can help. Can you imagine telling people you're not essential? How long do you tell people you're not essential? How does that work? How does that work? these, I don't know. It's a very strange world. It's not a world I would ever have expected. So, your supplier making you feel like they're doing you a favor, doing business with you, that's not very much fun. And, we've been there. We know what it's like. So then maybe you want to talk to us. All of our customers are essential to us. So like sometimes they say, we're Catholics when it comes to customers. We don't believe in divorce. We take on a customer for life. Now they can divorce us, but we'll never divorce them. We'll never say to a customer, you know what, you're kind of small. We got some big fish to fry. Go find somebody else. And we know, we heard a story just recently where somebody in our industry did just that. They got a big program that told their customers, other customers, go find somebody else. We don't want to deal with you anymore. That is so icky to us, that kind of thing. We wouldn't even ever consider doing that. Catholic, we don't believe in divorce when it comes to customers. At Park, we're continuing to go for it. We're not letting up. We intend to make this our time. We're not waiting. We're not feeling sorry for ourselves. We're not demoralized. Others may falter, but Park is not going anywhere. Okay, thanks for listening to the long presentation. And now, operator, I think we're ready for questions.
As a reminder, to ask a question, you will need to press star 1 on your telephone. To withdraw your question, press the pound key. Please stand by while we compile the Q&A roster. Once again, ladies and gentlemen, if you wish to ask a question at this time, please press star, then 1 on your touch-tone telephone. We have a question from Nick Ripostella with NR Management. Your line is open.
Hello. Good morning. Just had a question on the dividend policy. Is your intention to keep paying the 10-cent quarterly dividend? And, I know this is hard to forecast, but at what level would you think you would actually have to be in a situation where you would burn cash rather than generate cash? Thank you so much.
So at this point, we're not thinking of changing our regular dividend. We discussed that last quarter. So, it's something we continue to evaluate, but our position at this point is continue the regular dividend. And that's based upon, what we're looking at for this year, our internal forecasts. This year we probably won't cover the dividend. We probably have some limited positive cash flow, but it won't cover the dividend. But I think we're okay with that. It's important to us to continue the dividend. Now, it's not a guarantee. Something could change, but that's our perspective at this point. So, does that answer your question, Dick, or is there anything else I can help you with on that point or that question?
No, that's basically it. Only one other thing, and again, I'm looking at, I'm not saying this to happen, but at one point, an investor had requested or asked you to consider share repurchase. Now, I do believe all that cash is a good asset to have, especially in these troubled times. Are you seeing any more opportunities coming up for acquisitions? Is there anything out there that's looking more appealing in these troubled times? And just address share repurchase. If the stock were at 6 or 5 or something like that, is that something you might consider? Thank you.
Okay, so let's take those questions in reverse. So that's a hypothetical, but yeah, or how about at 1? Sure. As the stock goes lower, obviously their share purchase becomes more interesting. As far as the acquisition market is concerned, so what we're advised by the bankers we work with is that we probably need to wait another couple of months, maybe the fall. Maybe like September, October time frame for some of these opportunities that kind of come out of the woodwork. But we covered this in our last call. That's why I didn't go into detail on this call. But it's something very important. I mentioned just kind of briefly using our cash and our balance sheet to our advantage. But we've been frustrated with acquisitions for a long time. We've had cash for a while, but valuations have just not looked right to us. And I think with the benefit of hindsight, we were right and the world was wrong. So the inmates maybe are running the asylum because we're told, well, if you want to get in the game, you got to pay these multiples and everything. I think I mentioned last time we looked at companies that were actually where the asking price was maybe 5 times the revenue, and they were sold for 5 times the revenue. Not to us, of course, but in many cases we saw the announcement. We're quite stunned. We just don't, and these are not cure for cancer companies. Maybe they thought they were, but we didn't. So what we're looking for is something more central to our business, something that would be not a direct competitor, would be added to our business, different capabilities, different product lines, but still central to our business, not very tangential. And we've been looking, but we've been frustrated because the valuations have not been right. And maybe some of the things we're looking for weren't available as well. We're hoping that maybe opportunities will develop in the next couple of months. We're told by the bankers and the investment bankers we work with that they think it's probably the fall, because the way they explain it to me is that the sellers have to go through some kind of process of adjusting their realities and expectations to realize that whatever they thought they were worth before, that's kind of irrelevant. And also some of these companies may be in financial distress because the other factor is there's a lot of debt in corporate America. Everybody knows that. And maybe some big high-profile companies will get bailed out, but we're not buying those companies. We're buying smaller companies, Park size, something like that. So they're probably not going to have the opportunity to get a lot of help from the government, which is it's fine. So we're hoping to be opportunistic. We're hoping to be able to buy at least something important at good values, maybe even distressed values. So we're sitting tight. We have seen a couple things in the last couple of months, but we felt it was early. We felt maybe the valuation is still high, and also they're a little more peripheral, not so central. In aerospace, obviously, well, I shouldn't say obviously, they're all in aerospace. We wouldn't look outside of aerospace, but less central to what we do now. So we looked, but I think we decided maybe not for us. So, Nick, does that help with your question?
Yes, thank you so much. I just want to say I'm very appreciative of your conservative stewardship. Thank you.
Oh, well thank you for that input. Appreciate it.
Thank you. Our next question comes from Chris Hillary with Blue Bay Capital. Your line is open.
Hi, everyone. Good morning.
Hi, Chris.
Just wanted to ask, with all the disruption that's out there in the industry, do you see that creating opportunity for your to bid on new business, or is it more a situation where everyone is more disrupted and just trying to deal and manage their own business, commitments or whatever the pipelines are as they recover?
I think it's a little bit of a mix, but unfortunately there's a lot of companies in the aerospace industry right now that are just, I think, feeling very defensive and survival mode. So that could be a little frustrating. We're doing everything we can. We reach out to customers all the time. We're not going away, looking for opportunities. But it's not just black and white. There definitely are opportunities. I think especially in the military area where it seems that the funding is still pretty good. We have to keep at it. It can be frustrating sometimes for the sales guys, they'll call and say, look, we're having to call a customer. We're not doing anything now. We got no money. We're not no funding. We're just trying to, survive through tomorrow. Okay, we'll call you back next week. We're not going to go away, and we'll make a pest of ourselves. But there are opportunities, and I don't want to be overly generalized, Chris, but I think they're probably more in the military or defense area than in the commercial civilian. All industries are affected by the economic crisis and the pandemic, but military seems to be doing better. The funding is there. New programs are being initiated, qualifying new suppliers. So I don't know. Well, I guess that the answer to your question is not so black and white as far as I'm concerned, kind of a mixed thing. But from our perspective, like I said, we're going for it. We're not going to relent. We're not going to let up. And yeah, we'll be a pest. I mean, we'll keep calling. What can we do? How can we help? How can we help? And sometimes, I'll just say one other thing. Sometimes the first answer is, well, there's nothing we can do, but you need a follow-up question. Well, what do you mean by that? What are your issues? What are you struggling with? Don't accept no for an answer. Obviously you've got to be polite and respectful, not belligerent, but don't accept no for an answer. In other words, they may not even think there's an opportunity. You start a discussion, wait a minute, what about that over there? Oh yeah, maybe you can help with that. We're looking for little things, looking for big things. I mentioned last quarter there was a couple of initiatives that we're taking on. In other words, to do more ourselves rather than farming these things out. And we don't want to be specific because it's kind of a sensitive thing. So we're looking at those kind of opportunities at all. Those are not huge ones, but they're nevertheless opportunities. As I just said, small, big, either way, it's okay with us.
Okay, I think that covers my question. Thanks so much. Have a good rest of the summer.
Thank you very much, Chris.
Thank you. And I'm showing no further questions at this time. I'd like to turn the call back over to Brian Shore for any closing remarks.
Thank you, operator, and thank you everybody for listening. During the summer, when you probably have other things you might prefer to be doing. Even though the world continues to be a kind of a challenging place, I still want to wish you a really good summer. Hopefully, you'll all get away a little bit, get some R&R, and we'll talk to you again, at least in terms of a quarterly call in a few months. But in the meantime, you call us anytime you have any questions. So you take care and have a great day. Goodbye.
Ladies and gentlemen, this concludes today's conference call. Thank you for participating. You may now disconnect.